Hey, welcome investors to the 40 Finance channel. My name's Jeff Beers. Today we're going to talk about Amazon stock now through the end of their fiscal year. Where do I think Amazon stock will land at the end of the fiscal year? How does that compare to today's stock price? And what does the future hold for Amazon? If you're thinking about starting a new position in Amazon or perhaps trying to slide in on your existing cost basis, you're going to love this video. Reminder as always that my stock picks and projections are just my opinion for your entertainment. Please talk to a financial professional before taking on any risks in the stock market. But for those of you who like stock market analysis like this and going deep on stocks like Amazon, please give me a like and subscribe so that you can make sure to see all of my content. I post here 3 to 4 times a week and always have a new stock to cover. And if you're interested in joining my email list to get yourself a free bonus, I just released my 15-minute stock analysis guide. Lots of great tips in there for both newbies and existing investors on how to do quick research on some of those ticker names that you see on TV and you want to learn more about. 15-minute stock analysis, that's a free guide. Link in the description if you're interested. All right, let's kick things off and look at where Amazon stands today. This is coming off a little bit of a dip that we saw on Thursday and Friday heading into Labor Day weekend. Current stock price is $3,294.62. You see the boxes there in yellow, PE ratio at 126 right now. EPS on the trailing 12 months is $26. We'll be taking a look at EPS in more detail and where it's trending. And the 52-week range for Amazon, it's been a nice run. If you got in at the lows of 1,600 and would span all the way up to 3,500 plus, as the stock market has been trading at all-time highs prior to these last couple days of volatility. Looking at the top for some quick stats, trailing 12 months revenue, $321 billion. Lots and lots of money flowing through this company. You have cash on hand of $71 billion and a debt load of $91 billion. And for me with debt, I always just do a quick assessment. Do you have enough cash and revenue to cover what would be that debt load, which is of course spread out. Those payments are spread out long over time. And in Amazon's case, to no one's surprise, I think they have enough in the tank there to handle that debt level. All right, so the concept of Amazon, I think, is pretty straightforward for investors. I do want to take a quick minute, though, as we're building out our EPS case and look at their most recent quarterly earnings to see what's making money, how does it trend to the bottom line. That way we can get a better feel for the future. All right, so this is the 6 months that ended on June 30th. And we sort of have a few segments here. We have North America, online sales, international sales, and AWS. Those categories are off to the left. And if you scroll all the way over, I thought it was interesting in the red box, operating expenses for North America, how high those went up, likely due to retrofitting their operations for COVID safety. I imagine there was also quite a bit of hustle bustle as everybody decided to order things off Amazon being at home. They probably had to increase their distribution expenses quite a bit. But as you can see there, $28 billion increase in expenses is certainly nothing to sneeze at. And because of that, if you go down to the next line, the operating income was actually down very slightly to date compared to 2019. So you picture Amazon as a company that's growing quite a bit. It is in the revenue department on North America, but these COVID expenses have certainly handcuffed the operating income for these past 6 months. Looking at international, this is obviously a world that Amazon is, very interested in to move forward. Just important to note here that while international is a growth project, it currently does not contribute to the operating income, almost flat for the current 6 months. And last but not least, we have AWS. And if you follow that yellow box, you can see that across the board, AWS far and away has contributed the most operating income out of these three channels so far this year. If you're buying for the Amazon store, you might be surprised that AWS actually contributes more than the Amazon.com that you might associate traditionally with them. Finally, at the bottom, there's a yellow circle there for net sales, and you can see the categories. We have online stores, physical stores, third-party sellers, subscription services, AWS, and other. And all the way to the far right, I've shown a few percentages, what we have growing the most in net sales. So online stores at plus 36%, great growth story there. The COVID expenses seem to have taken a bite out of the operating income, but the revenue certainly is there. You go down though to third-party services and look at that, plus 41%. So getting these third parties on the platform and helping them with, ads and getting stores set up and stuff like that, that's a sales channel that I was sort of surprised how much that was growing, likely through their advertising. And then finally, I highlighted AWS, plus 30%. That to me is impressive only because you got to figure during the COVID time, I'm sure contracts for new AWS participants were slowed a little bit just for the hustle bustle of COVID. So plus 30%, nothing to sneeze at there. All right, so that's an overview of where Amazon is trending through the first 6 months of their fiscal year. Now we're going to use a very simple formula. If you've watched my videos in the past, we're going to take PE and EPS. We're going to try to project those two things, and that will give us our price projection coming out for the earnings call in January. So this is just a quick review. At the top there, under prediction parameters, there's our formula. Very, very simple. Price equals PE times EPS. We need to predict PE and EPS to get our price projection. Second bullet point, Amazon fiscal year runs January through December. And when that fiscal year ends, it takes a month or so for the company to come out and actually present their earnings. So this prediction is for the January 2021 earnings call, approximately 5 months away. And small disclaimer on the last bullet point, this is all subjective data. This is literally my opinion. And I go through my thought process so you'll know where I'm coming from, but keep in mind how much subjective data we're working with here. Okay, so the first step in the process is to get our PE number for Amazon. Where will PE land when their earnings call comes out in January of 2021? I mentioned subjective data, and PE is probably one of the harder things to nail down because it's really where the market stands, right? Where the appetite is not only for buying Amazon stock, but typically what is the buying pattern of the market as a whole. So the best we can do, in my opinion, is look at history for clues on how Amazon's PE has traded. That's what that yellow rectangle is there. You see right now we are well over 100 on the PE. And if you keep tabs on the stock market, you know that PEs are very high right now. In fact, even after the dip on Thursday and Friday, I would argue that we have another 20% maybe to go to get back to any sort of normal historical average. Now, interest rates play into that game, right? We have basically zero interest rates, so PEs, of course, are going to go higher when there's nowhere else to invest your money. But it is important to know we are at historical highs for PE trading right now and have been for quite some time. But if we look at history, and that's where the green circle comes in, at least the last 2 years, Amazon has traded around an 80 PE. So you see in the green circle, 2019 and 2018 finished at an 81 PE and an 84. Looking off to the far right, I'm going to take that historical valuation. I'm going to factor in that interest rates are not going up. prior to January, but I think they're overinflated right now. So I am going to choose a PE of 100 in order to come up with my price prediction. Okay, so we've got our PE number of 100. Now we've got to dig into EPS. EPS can be a lot easier with large cap companies that have a track record. That's pretty much what we got here with Amazon. So we're going to use history on our side once again, try to project where that EPS lands. Okay, so looking at our earnings history, the first green box there just shows you how Amazon's quarterly EPS has trended. You can see on the far right, in June of 2020, there was a substantial jump as costs of doing business in the COVID era sort of came down. They paid a lot of money to get that world going in March, and some of those dollars, paid off in the long run here for June. Ultimately, we take these numbers and we say, well, is that good or bad, right? Were these actual EPS, were they surprises, or did we expect that? Is there a pattern? What the heck's going on? That's where the yellow box comes in. And you look across and talk about a dart throw for a company like Amazon in terms of what analysts thought would happen and what actually did happen. You have a surprise percentage, -8%, +60%, -19%, and then +600%. So at the end of the day, I usually try to draw a conclusion off this, but if you look off to the right where it says unusable, I can't even do anything with this. These surprise percentages are so wild and wacky that there's no sense in even contemplating some sort of average out of them. So that means I'm going to be flying blind into the bottom where we have our EPS trend in the blue box, and we're just going to have to know that we have 2 quarters under our belt already. We have to try to project the next 2 quarters to get to an EPS target. That's what I'm going to do here. And the current year of 2020, you see the blue box, the current estimate from analysts, 3160 for the fiscal year. And you see my arrow, I'm going to use an EPS estimate of 32. I went back and forth quite a bit on this particular number. My rationale here is it will slightly beat, but I think a lot of the confusion, or let's just say uncertainty about Amazon earnings in the first couple quarters was obvious because of the pandemic. I think the level of certainty clarifies a little bit better here into Q3 and Q4. Those are already big quarters anyway with back to school and holiday shopping. So I'm going to assume that the analysts have gotten their act together and we'll land at 32 for our prediction. All right, so we've got the 2 pieces of our formula. Let's put them into action. I'll give you a couple different versions so that you can draw your own conclusion and make your own projection for Amazon stock. All right, right at the top of the board, my projected price for January 2021 after the earnings call, we had a 32 EPS times a 100 PE. That would put the stock price at $3,200. That is minus 2.87% from today. So again, the big factor here is that PE. Trading at a 130 PE today, I say it goes down. That remains to be seen. But I feel pretty good about a 32 EPS, but that PE is definitely a wild card. Mixing up the variables a little bit, if we did a lower EPS and a higher PE, so if I brought that EPS down to 30 and I kept today's PE of 130, guys, you'd land at $3,900 plus 18%. That shows you how critical a PE projection is. And lastly, at the bottom, more EPS, less PE, 34 times an 84 PE, which is sort of their recent average. And that drops you to minus 13%. All right, so think about that last one today in terms of where the market is as a whole. Right? If you brought Amazon stock down to their historical trading PE over the last 2 years, right? If you brought that down to 80 and you put in a higher EPS than I had, your price would drop to $2,856. That is minus 13% from where we stand today. So I think it's really important to wrap your head around that. Amazon could do better than I'm projecting, right? I'm projecting 32 EPS. That last example, 34. So they could do much better than I'm projecting by $2, but all we need is that market PE to come back to the historical average of 19 and 18, and the stock is going down. Not because it's a bad company, just because PEs are so inflated right now. Okay, so let's take a look at what other analysts think using the TipRanks dashboard. TipRanks makes it really easy to sort by the 4- and 5-star analysts. I highlighted the analysts who have reported most recently. You see the oldest is 9 days ago. They're all landing about 3,500 plus 6 to 8% of the price. The disadvantage for the folks below this from 1 month ago is, the market took a little dip. So I'm guessing they would have a different point of view today. But if you're on a full bullish outlook from the market and you say that PE sticks, then you can see a lot of these folks are calling for 3,700s, 4,000s, all those things. I think we will see more analysts coming in around 3,500 like the folks I highlighted in yellow. All right, so bottom line on Amazon, listen, hard to argue this one for the long term. If you're in a stock for 3 to 5 years plus, buying Amazon today I don't think is necessarily a bad idea. It's important to note, though, that PE, like so many stocks, so many of these stocks that I've done here recently, the PE is just higher than historical averages. So know that if you're trying to get into Amazon to do a swing trade or flip on the fiscal year earnings in January 2021, I don't think that's a good play. I don't think that there's a lot more room to run in Amazon. Of course, I could be wrong, but the only thing I would recommend right now is either lowering your personal cost basis on the next dip, or if you're starting a new position, watch Amazon very closely, knowing that the headway between now and the end of the fiscal year is limited, but if we see a substantial market crash, dip, correction, whatever you want to call it, there could be an opportunity to get in there and save 10 to 20%. For me personally, I do not own Amazon as a standalone stock. However, I have several ETFs in my retirement portfolio, FDN, QQQ, IYC. I am going to do a video with that full portfolio here soon, but that's plenty of Amazon exposure for me. I love the stock and I think that they have a lot of room to grow. However, I do individual stock purchases only in my retail account, and this one is not something I plan on buying. But I can't imagine anyone who's trying to retire would not want at least some exposure to Amazon, over the next 5+ years. So bottom line, if you are considering Amazon, I'd start looking for that 90 PE or below on dips as a good entry point over the next at least 3 to 5 months. That is something I think you could feel good about from a historical basis. However, if that occurred, at least from my perspective, I would still probably be buying other stocks in that sort of dip correction event instead of Amazon, only because I have so much ETF exposure in my retirement account. All right, guys, hope you enjoyed this quick breakdown of Amazon stock. Please give me a like and subscribe if you do, and I will see you on the next video.